All right, welcome back for the episode of Carnivore Trades. Today is Friday, November 10th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. And let's get into it today. So markets here having a nice rally. So spiders are up 1.3%. It is noteworthy, though, that we're only $1 above yesterday's high. So people are acting like we're up like 2.5% or something. We're $1 above yesterday's high, but it's the size of the candle and the size of the range of the move that has people excited. And we are finally into that 4,400 handle. You're going to see we're just peaking above that trend line. I did readjust this, so we talked about that yesterday. This is what you have to do as a trader. But this is where I originally had it 2 days ago, and we are peaking above that. We're also above the 100 moving average. So is that it? We're on breakout here. I don't really. I mean, technically, the SPX has not confirmed this, so we wouldn't even have a chance to be. But we are into this red candle right here, and now we're kind of coming into, and again, right in that area. That's where we broke down from, red candle, and then that red bar high as well. So it's still a resistance zone, not that far away. I don't think, and we're also coming into OpEx week too. And I think, honestly, the boat's getting a little loaded to one side here. I showed you this yesterday, but, AAII, when, you get almost 100% jump in a week and then a 50% decline in the bears there. And based on what I'm seeing on Twitter right now, I think we're probably due for some backing and filling here. And not just, 4 days of higher highs. I mean, I wouldn't even call this backing and filling, because we made higher highs every day, even on the day where we pulled back. But in any case, markets are hanging in there. We got a nice move for the spiders. This trend line's a little bit different. It's kind of like there's like an inch of space in there. And we do have some gaps down here. So I kind of inclined that those get filled. I know everybody's talking about the seasonality in the rally, but that doesn't mean things go up in a straight line. It doesn't mean that it has to happen. Powell's speech yesterday, that pretty much just got shit on by the market. And I mentioned this yesterday. I'm not sure if I mentioned it in here, but I know I talked about it a little bit to my members. And if you look at the yield curves here yesterday, that's a weekly. If you look at them yesterday, look at the 210 spread. So that popped up a little bit, right? 3-month 10-year popped up a little bit. This happened after Powell's speech. So what does that tell you? Market may be calling BS on Powell's, like leaving it open to interpret, or leaving it open to data dependency. So basically the market's saying the Fed's done, right? Or at least that's kind of how how I'm seeing it right now. But in any case, other thing too, bond market closed today. When the cat's away, the mice will play. This is what I mean when I say that. So bonds are the focal point of the market right now, and when they're not trading, the mice will play, basically. Now that is to be, side note here, like look at the 10-year ZN, that's actually red on the day. And actually the 2 years getting smoked. University of Michigan Consumer Sentiment came out at 10 a.m. and that was hotter than expected again. So the 2-year Treasury note yield continuing higher here, up another 3 bips, back testing this trend line. If this starts to continue higher, the whole narrative of recession and, I think the Fed is done, but if we take these highs out, the Fed's not done. That's kind of what I'm trying to say here. But right now, it's not, and it's back testing that trend line, so we'll leave it at that. But it's an interesting dynamic to pay attention to in the market. The fact that yields were kind of telling you that this was going to happen today, or at least left the door open for it. There's the 5-year that can still get up to 4.75, 4.8. Then the 10-year, this is interesting. The long end of the curve is starting to back off a little bit. Notice how as I climb through these curves, or these yields, starting to flatten out at the long end. So the 10-year right now, I think, could go either way. It looks like it wants 4.8. Also looks like it could get to 4.35. It's right in the middle there. The 30-year, again, same thing. Could get to 4.45 or 5%. So that long end's looking a little bit different. The short end's looking a little more resilient. If inflation upticks again, it's not something the market's going to want to see. But that's just neither here nor there right now. We'll have to keep an eye on that. We do have CPI on Tuesday, so that'll be a big one. All right, anyways, let's get over the triple Qs here. That is up 2%, so a whopping move. Again, it's just a Mag 7 show, right? I believe there's an article here on Zero Hedge. I'll try and pull it up for you. But NASDAQ breadth, again, hit a new all-time low. There we go. Again, versus the triple Qs. So pretty amazing stuff here. Microsoft, guys, just get in at any price, right? All-time highs for MSFT. So pretty amazing stuff. Triple Qs, though, coming into that 380 level, that will be a pretty good resistance point. But it's had a big move off that. Nice gap and go today. And again, it's big tech leading the market higher. Let's look at the Russell 2000, though. Still underperforming here. Grain, grain up 1.2% today, but still made a lower low. And look, weekly red candle again. So continues to be the big tech show. RSP equal weight, red on the week, right? So again, breadth. That's been the story the whole year. When they go back and look at this year in the history books, they'll just talk about the Mag 7 and how breadth was terrible. It'll be the big, low breadth rally essentially. Anyways, I'm digressing too much. The Dow here via the DIA up 1% on the day. More of a sideways kind of upright pattern here. Nothing wrong with this. This can still go higher. So maybe 344.50. I think we talked about that. 345. That'll be your next big resistance point there on the DIA. Semiconductors continuing to be a powerhouse. AMD up big. So AMD up 4.8%. Big move there for that chip. NVIDIA, what can you say? This has literally added an AMD since the 31st. Like literally, it's added that much market cap since the 31st. SMH up 4% on the day. That's going to be in resistance right there. It might need to stall out. And then, of course, your double top. What's interesting, too, and I know a lot of you guys have messaged me about this, but you look at the Philly Semiconductor Index. This is a lot more equally weighted. Not really the same chart, right? SOXS is the ETF. It's still a good chart. Nothing wrong, but a lot of the SMH now is NVIDIA. Just little side note. IGV up 2.3. That's through that trend line. That continues to be strong. 368 and then double top are the levels to watch there. IGV's been a really strong sector all year. Dow Transport's red on the week. So again, continuing to show weakness. Is this a leading indicator for something? If it is, it's been taking a long time to show up because it's been weak all year. So Dow Transport's holding that pattern there, holding the 20 moving average. It's getting a bit off that, and there's room for a higher low. But I just don't love the move here. And again, levels have not changed. We're still looking at 14.8 and then 15.175 area, 15.2. All right, we talked about interest rates a little bit already, so let's just skip over to housing. So XHB up 2% on the day. Again, no new highs here, and this is flat on the week like a lot of things. So if this trades up, we'll say 79 here in the near term. And then if you get through that, it's back up to 81. VNQ also red on the week, though it is bouncing here today. So again, lots of things red on the week. Not a lot of things participating. It's the big tech show. I know I keep saying it, but it's what it is. Anyways, VNQ. The trend line held, and now this double bottom or previous double bottom and point of control is holding. So that's getting a bounce there. Again, room for a higher low. If this level breaks, you back down into this area here. XLF. So that's hanging in there. Again, nothing wrong with the pattern. I think it might need to do some more of it based on the size of this move. But it can still inch up into 34.50 before running into some serious resistance there. Again, what I don't like about this rally we had a week ago is that there's just no supports built. So if we do, sell, there's not a lot stopping it on the way back down. KRE still can't get out of its own way right on the week. It's above 40. That's your positive. It's holding that last moving average there. That's also your positive, and that's really it. KBE red on the week. KBWB red on the week. So banks. Broker dealers getting a bid today. Back above the 200. Again, this can still consolidate and get to 490 and then 500. So that's trying to put in a higher low there, and we'll see what that does going into next week. Energy. So commodities or energy and commodities, crude here. That is up 2% on the day, but I no longer really love this, right? I told you that yesterday. It was a good level. It was good for a quick bounce. Nice 618, picture perfect. I'm going to take a shot at that every single time when I see, this little consolidation pattern, pivot high, and a 618. That's enough to take a trade. But right now, what you don't want here if you're a crude bull is you don't want sideways, right? Especially below that 200. Each day you're below that 200 and not back above it. This is just bear consolidation for a drop into the low 70s, maybe even 69. But right now, if the bulls get something going, you got to get back above this red bar, which is at 81.05. So 80 to 81 is your resistance. Support right now is right here, but if this goes, we're going lower. XLE getting a bounce finally. Didn't quite get to my 82 handle. Again, this also had the 618 right there, and you can make a case it kissed it, right? Well, you can say it got kissed. But right now, I wouldn't do anything with it here. It's not a buy. It's not a sell. Short term, 85, 50, 86 will be resistance. And then on the downside, you don't want to get through 82. If you do, you're going down into these pivots down here around 79. XOP into the little double bottom. Would have preferred a pierce of this double bottom before playing this, but it's already bounced there. So again, leave this alone. 130, 128, 130 gets interesting though. OIH is the best out of the bunch by far. Nice little falling wedge. Just let it keep consolidating. Why I say that is because look at the weekly and then zoom out to the monthly. You just keep consolidating here. This thing will be fine. And when this breaks out again, it's going to probably 430, 425. And if you get through that, it's just up to 500. So I like oil services, the OIH here, on the bigger time frames. Not saying it's a buy right now, but this is a good consolidation pattern overall. CCJ going to close above that high, so that's on breakout going to 45. The only thing I have against CCJ is the monthly is just parabolic, so just be aware of that. The last time this went parabolic, look what happened, right? I'm not saying that's going to happen, but this is just how big sell-offs occur, so just be aware. And I say this all the time, but on the monthly, right, ask yourself, did we build support? Right, so if this goes into a corrective mode, who's to say this doesn't go back to 3250 at some point? That's the only thing. I'm not trying to scare anybody or ruin the party here, but that's why I say this stuff. But it's on breakout and probably wants to go to 45. I do really like the pattern on URNM. If you wanted to buy something uranium related right now, I would say this is much better because it's not running away and it's consolidating here. And it's letting those moving averages catch up. Same thing with URA, URNJ as well. I like those patterns there. So uranium looks pretty good here. Nat gas pulling in again this week. So I would just look on the weekly right here. You can see right into this trend line, green bar, and it does look like it's doing some sloppy consolidation here after that breakout a few weeks ago. But again, pulling back and hitting that 50 moving average, as you can see right there. All right, dollar index continues to be a tricky trade. So right, daily, right, bearish inside bar, that's clear. It did actually tick green at one point today, even with the market acting well. But if you get above 106.22 and close above it, the dollar can go higher. It's really I'm just going to make it that simple here. But again, look on the weekly. I don't like the outside week down last week, but it's right back up this week. So if this continues to hold up and those moving averages catch up again, trend is up and trend is your friend. That's what I'll say for the dollar. Interesting price action. It's been a tough trade. Gold here continuing to pull back. So finally it did get to the 1940 area. We talked about 1950 to 1940. Got 1950 yesterday. Pulled into 1940 today. We'll see what it does. I would have preferred it to not bounce yesterday and then hit 1940. Then it would be a long, potentially going into next week. It's OPEX week too. Sometimes they like to hit the precious metals ahead of OPEX and into OPEX. If they do, going to 1900, that's your next big level there on GC. If it pops back up, to this little, I would say, triple top, minor triple top, and then 2050 are going to be your levels. Silver here pulling back as well, down 2.8%. So that is starting to roll over. Not liking the chart as much here. I would have preferred to stay above this weekly inside candle. So that, because you're now, right, red here, down, you can make a case you got those weekly lower highs now. So just be aware of that. Silver may have to do some backing and filling down to 2150 potentially. There'll be a pit stop at 22 though. Platinum here down 2% on the day. This is super, super tempting right here, but it is it's a thin metal, so it can overshoot. I'd rather wait for a buy signal first, but I do like it down here. Palladium, same exact thing. I'll say the same thing for it. Monthly 200 is getting sliced, but again, it's a thin metal, so it can overshoot. Just wait for a buy signal first. But there's a lot of, or if, like I said yesterday, dollar cost average, I don't have an issue with it down here if you're looking for long-term hold. But palladium, lots of support here. All right, copper. So that trend line's holding true this week. 1, 2, 3, 4 days down. Look on the weekly. I mean, that's a textbook pattern. I almost kind of want a short copper here. Bearish inside bar, below the moving averages on the weekly. Trend is down. Just back tested support there, or excuse me, back tested resistance. You back test the 200, back test the 20. It just looks like it wants to go to 340. I think maybe even 330. Now at this point. And the reason I say that is because you've done so much basing here that it could have some momentum if it really starts to break away. But yeah, copper pulling in. All right, anyways, Bitcoin here continues to act just fine. So we talked about that pullback yesterday, but it never went red. If it went red, then I'd be like, okay, you've got a significant top here in Bitcoin. But it never went red. It's just kind of hanging in there. Daily BB still flat, so it doesn't look like it's ready to do anything just yet. Again, my kind of thesis, my hypothesis, and this is just my thoughts on what could happen is you're gonna get the ETF news. It's gonna pump up like $2,500 immediately, and then it's gonna be sell the news. That's just kind of what I think happens. That's what feels like is gonna happen. It just feels like they're just pumping up into the. I mean, there's so much hype into this ETF. That's just kind of what I think. So 40,000 is still good resistance, and even 38 for right now. But it's still acting well. Yesterday, BlackRock did file to get a spot ETH ETF approved, and that helped out ETH and all the alts. You can see all those ran over the last couple of days. Look at Solana, that's still going. That is still going. So that is just amazing move there. Cardano, probably wants that 40-cent area. But anyways, so ETH getting that big pump yesterday, and into that kind of minor double top there. If we can get through that, I mean, then it gets interesting, and then you're looking at like 28. But again, we can talk about that later. But that's just kind of what I think happens here in the near term. And again, don't forget about that monthly Bollinger Band there. It's pointing down, so just be aware of that. Okay, anyways, let's wrap up here. So spiders here, getting a little bit of a micro bid here in the final half hour. So it looks like we might be going for that trend line here by the end of the day. Either way, it's of no consequence. We had a rally, and we'll leave it at that for now. Remember, next level, right around 443, I'll draw it in there. So right around 443 area, pivot, green bar low, pivot. Remember, that was the inside bar that failed. So there should be resistance there. And then, of course, the red bar, breakdown bar high, which is at 444, 444, say it 5 times fast. Right there, right in that zone. So if we do push up here into next week, that's where we're going to go. Remember, CPI, there's going to be a lot more data next week. We have CPI. We've got VIX, that should be some fun. And then also we have, of course, monthly options expiration on Friday next week. So we'll be there to cover that as always. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all next week.